Welcome to the Building Web3 Podcast. Today we have Thomas. He's the co-founder at Hey Apollo. Thomas, before we get too deep into Hey Apollo and what you guys are doing over there, give us a brief background into what you were doing before you got into Web3 and what was your come to crypto moment?
My background is in finance and sort of traditional fintech, if you'd like. I worked in that space for a handful of years. Came across Bitcoin actually, maybe 10 years ago when I was doing an internship at the RBA, which is Australia's central bank, and kind of just was immediately intrigued. I started studying and I did my university thesis in Bitcoin. This is kind of a big new alternative financial system, or at least it had the potential to be. I think it's a lot like 10 years down the track, it's a lot more clear to me, this is really happening. I think at the time when I first came across it, it was more of a curiosity, certainly very interesting. And I was also just really excited from it, from a this is super interesting from the volatility of the asset and the stats behind it. And it's just also, it is such a kind of a mind-blowing novel concept. I think most of us have maybe become a bit more used to it now, but at the time, this whole idea of non-government money, it was kind of mind-blowing to me. So that was, I guess, my discovery of it about 10 years ago, but I didn't start working in it straight away, or really putting all my focus on it. I went into the traditional financial world. I was working in investments. And then I sort of got into a bit more fintech space, but only in sort of 2022, we, together with two other co-founders, we decided that we wanted to really devote all our energy and efforts into Bitcoin. And it was kind of on the heels of, excuse me, on the heels of what was a pretty bad year for bad period of time in Bitcoin, in the sense of the industry was going through a lot of what I would say is a loss of trust. Basically, there was the FTX fiasco, or even preceding that. We actually started before the FTX, but that whole period of time, a lot of exchanges were going down. People were generally losing faith in the industry as a whole because you had a lot of bad actors, essentially. And so we kind of created Apollo, or heyapollo.com, with the idea that we were going to highlight some of the better, or the actual best products and services in the industry, and actually give people a place to find out where to go, and actually what's basically separate the signal from the noise in terms of discovering what kind of services are actually valuable versus scams or things to avoid. So that was kind of how we kind of had the genesis of the idea of what we've been working on for a couple of years.
So talk to us a little bit about Hey Apollo, what you guys are doing there, and kind of what's the overall mission?
Sure. So the idea is to essentially provide a place for discovering the best products and services in Bitcoin. And through that, what we do is we allow users to come in and write reviews of these different services, and they actually get incentivized to come and write reviews of these products and services because we provide you get paid in Bitcoin to write these reviews. So there's a bit of an incentive model to actually, like a value for value transfer. If you're going to take the time to write a high quality review, you get rewarded in Bitcoin. But what it is, the purpose for readers of the website is to come in and just a discovery platform for the services. Essentially, you can think about it kind of like a TripAdvisor, but for the Bitcoin industry, basically. And so that was the genesis of the idea. And then from that, we started to focus more in the last year or so on these Bitcoin ETFs, because what we came to the conclusion to and towards sort of at the start of this year really is that, the biggest and most valuable new products in the Bitcoin industry right now that are onboarding the most amount of people to Bitcoin are these ETFs. This is like the big story of 2024 and probably the big story of this crypto cycle, if you'd like, or Bitcoin cycle, which is onboard like a mass adoption of people via these sort of traditional financial assets, as Bitcoin is kind of embedding itself into the traditional financial system. And so we had a sort of we wanted to, play a part in highlighting that. So we built this ETF tracker and we're tracking the flows and really putting a sort of highlight and focus on that. So, I hope that gives you kind of a snapshot of what we're doing at Apollo. Of course, we can talk about it more, or we can talk about Bitcoin or whatever you like, really.
Yeah, let's talk about this a little bit more, and then we'll get to more of the Bitcoin stuff. Sorry, I have one of my roommate must have just ordered some package. Let's talk about who is paying out the reward. Is it Hey Apollo, or is it the underlying like services that are, I guess, incentivizing? Because I feel like you could run into a problem where like the company's then paying for reviews. Does that make sense?
Yeah, so Apollo is essentially like the third party paying out the reward. We do partner with other companies so that they can kind of, if they want to offer more rewards for reviews, they can also fund it as well. So it's a mix of both. Essentially, like we partner with the companies so that they can provide the funding, I guess, for these reviews. But Apollo was the third party adjudicator, if you'd like, that we kind of help determine if the reviews are legitimate, and also like basically we're the kind of the third party platform. But it's a little bit of both, to answer your question.
Got it. So let's talk a little bit about Bitcoin, because Bitcoin this year, or really like the past 2 years, there's been a bit of a Bitcoin renaissance. When I was getting into it, and it was something you bought fake IDs with online in 2012, and then it was digital gold for a while, and now there's this build on Bitcoin narrative. We're seeing L2s, we're seeing like BTC Fi. Talk to us a little bit about where Bitcoin is going, and kind of the evolution you've seen in this like Bitcoin renaissance.
Well, look, I mean, I think there's kind of multiple angles you can go with this. I mean, the way Apollo, say, makes payments to these people that write reviews is via the Lightning Network, which allows for sort of instant global payments, essentially free, zero fees, and you can pay anywhere in the world, all over the place. And that does rely on this kind of layer two, which is what you, I guess, alluding to there. But to be honest with you, where I see the big kind of development this year and maybe in the next few years is less on the what I would call crypto building, and I would say more on actually embedding it into the traditional financial system. I mean, if you think about where the big progress made in the last year, actually, it's like the biggest layer two in Bitcoin right now is BlackRock. Hilariously enough, but it just is. They now have 350,000 coins. This is more than the Bitcoin held in Ethereum. This is more it's orders of magnitude more than the Bitcoin held in the Lightning Network. What we're seeing is the traditional financial system is adopting Bitcoin, and so I see kind of the big thing that's happening is basically financial advisors are starting to allocate and starting to look at their overall portfolio and going, instead of this kind of classic 60% equity, 40% bonds, maybe I need a portion of that in Bitcoin. And when you look at the more sophisticated investors, they already have kind of alternative investments, right? That's most kind of, look at the Harvard Endowment Fund, whatever. They all have a kind of slice of the portfolio that they look for quote unquote alternatives. It's already standard to have an investment portfolio alternative investments, but what we're seeing, I think, more and more is you have these kind of these big players like Morgan Stanley, Goldman Sachs, all these kind of traditional financial players, they're actually just really starting to allocate towards Bitcoin. And we're seeing these examples like the Wisconsin Pension Fund, which is allocating to Bitcoin. And more you're going to see a trickle of these traditional financial players start to look at Bitcoin like as part of their whole portfolio. And as an individual investor, you might look at Bitcoin like you're probably going to have if you're in the Web3 space, if you're into crypto, you're probably going to have a much higher allocation to Bitcoin than these guys are. But the reality is that they are going to, what's going to happen is that all these traditional financial players, they're going to put 2% of their portfolio in Bitcoin. And there's a lot of capital out there in this kind of institutional world. And that's where I see kind of this big narrative of a Bitcoin bull market driving Bitcoin flows. It's these big players allocating to these traditional financial investments. And it's all kind of a bit boring in the sense of it's not this kind of exciting DeFi Web3 stuff that I agree is intellectually very interesting. It's much more, frankly, dull. But at the same time, it's the hard thing that actually takes Bitcoin from $60,000 to, now we're in gold market cap. It's like the old school, dull, boring investment thesis stuff that actually that's what drives the bull market. And then on the back of that, what happens is that people that are maybe more heavily involved in this kind of world, you get what happens is that it's like rising tide lifts all boats, and you do then consequently get a lot more investment in sort of the ancillary things in Bitcoin and crypto that you want to start having like decentralized exchanges or additional things built upon it, or more investment in layer twos and all sort of this thing. That just happens naturally when you have an industry, if you'd like, that's instead of focusing on a $2 trillion pool, now it's focusing on a $15 trillion pool. And there's more old school, there's more people that are willing to invest in the ecosystem. And if you look at most of the investment in the actual infrastructure and sort of Bitcoin and this sort of thing happening right now, still, if you look at like the LPs of the Bitcoin funds and this sort of thing, a lot of it is coming from people that have just made a lot of money in Bitcoin or made a lot of money in crypto. And I think that's going to be the continued story as well. So you're going to see these people that make a lot of money because they've just been in Bitcoin for a very long time. And then, these traditional financial investors are going to come in, allocate to their portfolio. Bitcoin is going to go up a lot. And then they might have these kind of more grandiose visions about what Bitcoin can be in terms of crypto asset. And that will then drive investments in whether it's layer twos or, or the kind of, I guess, kind of quote unquote building in Web3, which I think you're referring to.
Mm-hmm.
Curious to hear your views on that as well, though.
Yeah, I think we should continue to pull on the institutional chain. So, obviously there's the ETF, but in financial services, a lot of stuff is driven by financial advisors. But do you have any idea as to like how many pension funds or like what percentage of pension funds or what percentage of financial advisors are even allowed to recommend these assets? Because usually it's like, hey, Morgan Stanley will tell all of their like financial advisors, like, hey, we have these like premium clients that can actually invest in the more risky alternatives. And then we have like the people that run your like local advisory in that's like Morgan Stanley adjacent in Wyoming, for example.
Sure. Well, look, I mean, to your point, that's happening over time. So, for example, these ETFs launch, and just take Morgan Stanley, for example. The day they launched, the ETFs were available to Morgan Stanley clients, provided that the clients requested it from Morgan Stanley. So if they went up to their advisor and said, I really want to invest in IBIT. I really want to invest in FBTC. Then that Morgan Stanley could facilitate it, but they weren't pushing it. Whereas, as recently in the last couple of weeks, Morgan Stanley's had a change of approach where now their advisors are actually able to come in and recommend Bitcoin as part of like a holistic portfolio analysis and recommendation to their clients. And this is the kind of infrastructure that just happens it's like a trickle. It just happens over time. Each of these different brokerage houses, they have their own kind of rules or decisions about how they want to make and how they're going to allow access to these investments. And part of the reason is that what happens is that you have a situation in which when the new products come online, people like to see a track record before they, like advisors recommend it. So what you see is that, Bitcoin has got a 15-year track record, but BlackRock Fidelity does not. And so the IBIT has been around. It's been around 6 months now. So now there's a bit of if you want to take this to your client, you can actually look at the portfolio, like the performance of IBIT, and you can say, oh, look at the correlation to traditional equities. Look at the actual performance since over the 6 months. And you start to have a tracker, and you start to build this up. And so like different advisors kind of are taking different approaches to it. There's a lot of rumors or such that more and more banks and more advisors are starting to take this approach of going to start recommending it within the portfolio. And the one thing I would say is that if you just looked at what people's expectations were about the kind of flows into ETFs going into the year, most people said, hey, the flows in the second half of the year will be bigger than the first half of the year because it just takes time for this infrastructure to be set. And most people said, hey, the flows in 2025 will be larger than 2024. Now, because of this same reason, right? It takes there's a trading history, there's a time. It takes these brokerage houses need to actually make it available before they start advising clients, and also it just becomes normalized as an investment. So now you've seen like the Wisconsin pension fund allocate to Bitcoin. Well, now socially, it's a lot easier to be the next one. There's a kind of a mimetic quality to it where there's less risk. Like it's quite I don't mean financial risk. I mean like career risk. If you're the guy that's making the decision to allocate to Bitcoin within your fund, as other people do it, it just becomes a lower risk investment for the individuals making the decision. So I think that's how we're seeing it play out.
And because we have now all these institutional inflows, and we expect that this will continue, do you have a general like price prediction where you're like, hey, I suspect by year 2025 or 2026, like you'll see, I assume you think it will go over 100,000?
Oh yeah. I mean, I would look there. I think that I would say, I try to think about this in terms of like, different scenarios happening. But with that being said, I think that if you were to look at, there have been surveys done looking at traditional financial advisors, forgetting the, endowments, forgetting the insurance companies, forgetting the pension funds, just financial advisors. And these surveys done over many years, how many, are you interested in investing in Bitcoin? And again and again and again, they come back and you see something like 75% of advisors say, yes, we actually are interested in investing in Bitcoin. Now, they haven't really done it because the infrastructure hasn't been available for them. So they weren't going to do it when they didn't have an ETF to do it to, because how do you custody the coins? They're not going to tell their client, oh, go log on to Coinbase or go log on to Binance. So it's just not going to happen. That's absolutely not going to happen. But BlackRock, you're already in a BlackRock ETF. That's a very easy sell in the sense of you got your money with BlackRock ETF here. Now we're going to talk about a different ETF there. It's easy to do. So the point is that if you look at traditional financial advisors in the US, and the numbers fluctuate, but some estimate, the sort of most common estimate I've seen is they hold about 8 trillion in assets in the US. Now, in a world in which you have, let's like, if and the surveys kind of suggest 75% of them want to invest. If they were to invest, I mean, I'm not saying that this is going to happen, but just to kind of put the numbers out there, right? If you saw a situation in which 75% of advisors want to invest and they invest just 2% of their assets, you start looking at a couple of $100 billion of flows into Bitcoin over the next couple of years. In that world, it's very important to understand that Bitcoin market cap doesn't go up like, Bitcoin is sort of 1.2 trillion today. If 200 billion flowed into Bitcoin, Bitcoin doesn't go from 1.2 to 1.4. There's a multiplier effect on the capital, right? If Bitcoin goes from 1.2 to 10 trillion, 20 trillion, like that's the kind of effect 200 billion flows could have. Maybe not 20 trillion. That's probably a bit aggressive. But the point is that there's probably like a 50x multiplier on the kind of flows that you could kind of come in and see. So I wouldn't at all be shocked to see, there's a kind of a long-winded answer, a way of saying I wouldn't at all be shocked to see Bitcoin challenging sort of the gold market cap over the next few years.
Wow. Now, I had an episode earlier today where a guy was talking about a lot of quantum risks, and you'll get relative like FUD for maybe we'll say the environmentalist movement, where they'll say like, oh, the energy consumption is incorrect. Do you have any worry for some of these like more existential threats to Bitcoin?
No, not really.
Hey, I
I
love that.
mean, I mean, look, the quantum computing thing. I guess that is maybe like an out there like long run 10, 20 years, whatever. But the reality is that in that sort of situation, you benefit from the fact that Bitcoin is, it is a software protocol, and if they need to, Bitcoin runs on a security SHA-256 hashing, and if that becomes vulnerable, that if that encryption becomes vulnerable, Bitcoin will need to change its encryption algorithm. But the whole world runs on encryption. If Bitcoin is hacked, everything else, the whole internet and the traditional financial system goes down too. So it's kind of like asking, are you worried about like a comet coming to hit Earth? Like, well, yeah, I guess, but not really.
Yeah, not really. I mean, if everyone's doomed, we're doomed. But hey, we're coming up on some time here, so let's do some rapid fire questions. I know you're a content creator in the Web3 space. If anyone's looking to enter content creation, like maybe give daily Bitcoin, content like you do, talk to them a little bit about how you would get started if you had to restart tomorrow.
Yeah, sure. I mean, I would just say that, and look, I mean, the most basic thing is that you have to be providing like interesting value that maybe other people are not, or at least maybe other people are, but not like it's not really common. I think that people are really interested in statistics or things that are newsworthy. So if you can find a way to kind of gather stats that other people are not and then present it in a nice chart, that's always really interesting. I think people are interested in things that are really like relevant. So you might, and what I mean by that is it shouldn't be so like, look, if it's evergreen content, it's probably not that interesting. Like that's a kind of generic thing to say, but like if you're providing content out there and it should be like, oh, it's relevant and it's relevant today because something's happening today, like or maybe not today, but in the last, like a trend I've noticed over the last couple of weeks is affecting the market somehow today or in the next little bit. If it's about statistics that are, if you could have made the same post 2 years ago, probably not that interesting.
Yeah.
And then, yeah, I think people are just, generally interested in charts and analytics and this sort of thing. That's been my experience, observations.
Absolutely. And if people are interested in learning more about the charts, the Bitcoin analysis, and the flows updates that you provide, where can they find you online? Shout out any kind of social media you have.
Yeah, sure. So I mean, I'm on X. It's Thomas_Fahrer. Fahrer, Fahrer. That's probably the best way. I mean, we and the other way is our website, heyapollo.com. So definitely come check that out as well.
Awesome. Thomas, thank you so much for joining the Building Web3 podcast. To all the builders, go check out Thomas, go engage with them online, go get rewarded for reviewing some of these Bitcoin innovations. So thank you so much, Thomas.
Appreciate it. Good to chat, Jax.